$18.3 trillion. That's how much customer money moved through one American bank while nobody checked where it came from. Cartel cash, profits from fentanyl, money that paid for human trafficking. One man the Justice Department calls only David pushed $470 million of it across the counter himself. TD Bank pleaded guilty to conspiracy to commit money laundering, the first American bank in history to do it. It paid $3 billion. No individual has been announced as going to prison.
TD Bank created an environment that allowed financial crime to flourish. By making its services convenient for criminals, it became one.
Because 5 months later, the United States government switched off the one rule that could have stopped it happening again. Then, a judge killed the backup. That one lasted 18 days. This isn't a story about how criminals hide money. Everybody explains that. It's about who keeps selling them the place to hide it, and why the bill arrives at your closing table, on a house you're bidding for against money that never has to say its name. You've heard the mechanics. Cash gets broken into deposits under $10,000. It moves through shell companies and front companies. It gets layered through so many accounts that tracing it back would take a lifetime. All true, all beside the point, because every one of those steps rests on a single foundation. Strip it away, and the whole thing collapses in an afternoon. A shell company only protects you if nobody can find out who's behind it. A front company only launders cash if nobody can see who owns the front. Layering only works if each layer is opaque. Anonymity isn't a feature of money laundering, it is money laundering. Everything else is paperwork. So the real question was never, how do criminals hide money? It's simpler and much worse. Who is supplying the hiding place? There's an index that measures exactly this. The Tax Justice Network's Financial Secrecy Index doesn't rank countries by how corrupt they are. It ranks them by how much secrecy they supply to everybody else. Switzerland is second. Singapore is third. The United States is first. Not the Caymans, not Panama, not some island you'd struggle to find on a map. The country with the most sophisticated financial regulator on Earth is also the world's largest supplier of financial secrecy. And it has been at or near the top of that list for years, which raises an obvious question. If the United States knows this, and it does because its own treasury publishes the strategy documents saying so, why hasn't it fixed it? It tried. Once. Congress passed the Corporate Transparency Act to build one thing: a registry of beneficial owners, a federal list of who actually stands behind every anonymous company in America. It is the single instrument that does what nothing else can. It doesn't chase the money. It removes the mask. Every launderer in the Justice Department's own case files depends on that mask staying on. And on the 26th of March, 2025, the Financial Crimes Enforcement Network issued an interim final rule exempting every entity created in the United States from reporting who owns it. Every LLC, every corporation, every entity formed under the law of any American state. More than 99% of the companies that were supposed to report no longer have to. What's left is foreign-formed companies registered to do business in the States, which is to say, the ones a launderer would have no reason to use. The registry still exists, it just doesn't point at anybody who lives here. And the timing is the part that's hard to look away from. TD Bank pleaded guilty in October 2024. The exemption landed in March 2025. 5 months. The Government Accountability Office, the federal government's own auditor, has since published a report telling the Treasury to address the gaps its exemptions created. Here's where this stops being about banks. Anonymous money has to land somewhere. And the safest, quietest, most respectable place to park it has always been a house. We know what that does to a market because it has been measured. In 2016, FinCEN ran an experiment. In a handful of counties, starting with Miami-Dade, it required title insurers to identify the real human being behind any shell company buying a home with cash. Just those counties. Just cash. Just a name. 2 economists studied what happened. All cash purchases by legal entities fell by about 70%, and prices in covered counties fell with them, roughly 4% annualized at the luxury end. Read that in the other direction, because that's the direction you live in. Anonymity was inflating the price of housing. Remove it in a few counties and the market corrects. Which means the secrecy isn't free. It's a premium, charged to everyone bidding against money that doesn't have to say its name. So FinCEN wrote a rule to do nationally what it had proved worked locally. Every non-financed purchase of a home by a company or a trust reported. No price threshold, no geography. It was supposed to start on the 1st of December 2025. It got pushed to the 1st of March 2026 to reduce the burden on the industry. It took effect on schedule. 18 days later, a federal judge in the Eastern District of Texas struck it down. The court held that FinCEN had exceeded its authority under the Bank Secrecy Act. A different federal court in Florida had upheld the very same rule a month earlier. FinCEN's own guidance now says reporting persons are not required to file and face no liability if they don't. So run the ledger. A bank pleads guilty to laundering money for cartels and pays a fine it can afford. The registry that would name the owners gets switched off for 99% of American companies. The rule that would show who's buying the houses lasts 18 days. Every single mechanism that requires a name has been removed, delayed, or struck down in under 2 years. Every explainer ends with the machinery, smurfs, shells, layering, the clever chain of gold bars through Nicaragua. But the machinery was never the interesting part. Criminals will always want to hide money. That's not news, and it isn't a story. The story is that hiding it requires a country willing to sell the hiding place, and the one selling the most is the one that writes the rules. Money laundering doesn't win every time because launderers are smart. It wins because at every point where somebody could have been made to say their name, somebody decided they shouldn't have to. And right now, today, 2 federal courts disagree about whether anybody buying an American home with anonymous cash has to give a name at all. One said yes, one said no. Until that's settled, nobody has to file anything. Whichever way it goes, you'll find out the way you found out last time.